Hello guys, welcome to the Trading Parrot. Happy Saturday. We are going to do a wrap up of the week. In this video, I'm going to cover a lot more than just the levels. I'm recording from my phone, but that's all I can do. I hope you still appreciate all the alpha that you're going to get on a Saturday. If you do, hit the like, subscribe, and write down a comment down below. That really keeps the channel afloat, because every day we're getting only 1 or 2 subscribers, which really sucks. At the very least, I see your comments, I see your likes, and I know that someone out there evaluating this information. So today we're going to cover the 4-hour and the daily. There is some patterns that could produce some bullish moves. There is also some things that we need to cover on the weekly, including the bull market support band. We need to cover the CPR, top bottom weekly model that has not broken except for once in 2022. We need to see where we are there. Very important highlights that I'm going to cover. The big boss as well. We're going to cover the ratio against gold. Leverage squeeze is sending a signal that you don't want to miss if you are interested in swing and scalping. My community were already aware. We talked about it yesterday privately on Patreon. If you want to be part of that when it happens early, you need to subscribe my Patreon. You must do that this weekend because, yeah, why not? Give some love to the Parrot and to the team Parrot, because we are not just me, we are a team. And I'll cover some news as well. Okay, are you ready? Let's go. So basically, we are here on the daily time frame, and on Sunday, last week, Sunday the 9th, we had a breakout, okay? In this area in here, I was, oh my God, wow, a breakout. I'm really surprised. I was expecting to go into the liquidity on the lower end. I'm looking for my entry in the low 90s, and suddenly we had a breakout on a Sunday pump. And what happened? We ended up reaching an RSI of 45.88, and we came back in here. That was very painful. It was 1 day of downside, 2 days of downside, doing a retest. It looked very perfect. This bastard closed at 38, 39, looking like it was gonna retest and continue to the upside. Of course, I don't mind. If we will have, put a new higher high in here, I will be happy, because I probably will be by now break even on my long. If we break below it, I'm looking to average up my long. I'm risk free. I have still my short open. Yesterday I showed how good it's doing on Bybit, which you can use the link in the description to get 30,000 in rewards if you want to open an account there. And we ended up faking out. We came down to the next support, that is the green line, 32 RSI. But we not only went there, we actually put a new lower low on the daily. Today, on a Saturday, we are kind of potentially reclaiming it. Notice that the bounce was at 30, and at 26.5, we have the full global support of daily. We need to look into those RSI levels. We need to see where they are in the price. That is going to be very important, because so many people are looking into a specific pattern that I'm going to disclose once we get into the fair value gap analysis, because everybody's looking at that pattern and we do not want to be unaware. That can improve our trading, definitely. So we got a high signal, bullish divergence, combination of multiple oscillators are aggregating probably 3 or 4, I don't know, in terms of number of divergences that are accumulating from different indicators, right at a level of support. If you look at this white line that connects 1, 2, 3, 4 many times, and we're just there. We just hit that level, which also coincides more or less with that green line of support on the RSI I just showed you 30 seconds ago. That is that support with all those bullish divergences. So there is a case in here for a potential move up. Notice that the RSI doesn't have a bullish divergence. The RSI put a lower low, the price did as well. So we do not have bullish divergence on RSI. So I suspect that MFI, CCI, maybe who knows which other oscillators manage to do it. Anyways, we have bullish divergences and we are at support. So that is the takeaway. And the takeaway says that potentially this could form a double bottom and produce a new breakout. Now we need to make this official. We need to move this line from here to around there, if the phone allows me to do that in such a small screen. You see, I'm very devoted to my community. I'm even doing this in a microscopic scale on my phone. 39.62 is now the new resistance for breakout. Question: could we get a breakout again on a Sunday? And if we do you think it's going to be just another fake out? There's going to be a lot of controversy around that. If we reclaim that green line, that is a liquidity hunt. That's another bullish signal, together with a hive, together with support, together with a bunch of other things I'm going to show you in this video. And if that plays out, we could be facing that resistance of 39.62. Now, let's move this youth. Is always in the way. And let's see if the Galaxy 7 Fold is going to tolerate all the heavy things that I need to do. So we have that resistance. We say it was at 39. Come on, guys, remind me, pay attention. 39.62. Yeah, there you go. You guys are not paying attention. It's somewhere here, 39. Yeah, let's leave it at 39.59. So that resistance for a breakout means that the price needs to break beyond 98.8. So pretty much 99 we need to break above today, tomorrow, Monday, who knows, but at some point. It's a moving target, so 99 might move. It might point even lower. It might be 98 later in a couple of days. So stay subscribed, stay tuned in the channel, or check my Telegram channels. In my Telegram channel, there is a section specifically for charts. Asks the other 1,000 people that are there already taking advantage of that, and you will find it. Let's go into the 4-hour. On the 4-hour time frame, we are going to have a little bit more noise. We were talking about another pattern that is also bullish, which is this ABC correction that you can see on the top of my phone. Let me move this slightly here to the left. You're going to see the ABC, right? So that is the wave. We already achieved all technical targets of all head and shoulders. And we are around trading around 96K. We already pinched 94.8, something like that. We are definitely at discount. We are at the bottom of the range on the 4-hour, and we could be seeing something coming in. What am I tracking on the 4-hour? I'm tracking on the lower end of the chart, the cross-V ratio, potentially pinching again the volatility peaking to the bottom end. That could give us a second P signal. Look at the top of the chart. There's a P in green right there. That was a relief from a double bottom of around, let me remember, it was 98. It moved all the way to, I think it was 107, roughly. Yeah, that was my line in the sun, which we couldn't cross. 3 weeks ago, we talked about that. And then we got rejected. We could be getting a second P. We are about to get it on cross-V ratio. And if we do that, if we get it, potentially the RSI that has been doing a channel to the downside, look at the RSI in the middle of the chart, is against resistance, downward sloping, and it's testing right there, that 39.23. Combined, RSI 4-hour and daily could be about to do something. Okay, it might be a little bit lower on the 4-hour. It might be that maybe there's a bit more pain to be had. That is the opinion of liquidity pools. Liquidity pools are saying a little bit lower, and that's why I haven't averaged down yet. Okay, so this weekend, the challenge is, are we gonna bottom right here and start moving right straight up, because we are at monthly support? There's very critical levels we need to discuss. Or are we going to continue slightly lower into the low 90s or slightly into 88? Because there is the next level, basically. So that will mean that we go one level down in the ladder. That is the question. And unfortunately, my bulls are not crystal, so I cannot tell you the future, and I truly have to deal with that. That's the case for every trader, whether you accept it or not. That's the case. We have a falling wedge. That is the pattern I told you earlier in the video that everybody's watching. There's been other patterns in the past that people are watching, and they tend not to play out, but we'll see. We got this one that is kind of spoiled already. If you look at the bottom end, we already pinched the breakdown. Okay, so we could be retesting, trying to enter the falling wedge and get rejected, and then go for all the fair value gaps at the bottom. Not all of them necessarily, but for some of them. We have from 92 all the way to 85, there is a cluster of fair value gaps that are heavy, that are going to represent liquidity, and that's the motivation for price to fail re-entering the falling wedge. If we can re-enter the falling wedge, the low-hanging fruit is to go to 103, because they're right there sucking in the price to the upside. The challenge is to cross the vacuum over 102.7 into the next fair value gap. That, let's say it starts at 107.5. Oh, surprise, surprise. Again, the 107 is the pain in the ASS, right? And it's been, we said, if we cross 107, 2 weeks ago, I told you, we can really recover. That's my line in the sand. Some analysts picked 110, some others picked 103, but here, Daddy, we pick the right lines, right? We are the best channel of trading, period. I never seen such a thing on YouTube. You won't get better traders. There will be better traders than me, sure, that call better things, better levels, and they have, maybe they have the same win ratio, very high, and maybe they make more money. Sure, absolutely. But they're not in YouTube. So you got this perk of having someone teaching you everything just because I'm passionate about teaching. Anyways, if you don't hit the like, you deserve a punch in the face. And if you don't subscribe, same thing here. Hardcore fans, if you're a hardcore fan, tell off the other people, because people are really, really sometimes pissing me off. Let's go to the next chart. So on fair value gaps, everything is clear. Let's go to CPR. We cover plenty of different charts. This is the problem I'm having with this Galaxy. Sometimes it's getting slow to load some of the charts, but I think that's the fault of TradingView. Somehow it doesn't work that great on Android. On iPhone, it works like a charm. I say CPR, right? So let's go to CPR. One tap at the time, slow down. I want to do things very quickly, but the phone doesn't allow me sometimes. So we got 99 support on the CPR levels of November. And we went to test it 3 times. On the 4th time, that was a couple of days ago, we were testing that 99. And now we have it as resistance. If we cannot reclaim 99, CPR says 88 is the next, okay? You got the memo, the analysis of CPR. That's what we needed to say. Let's go to top bottom weekly and let's analyze this magnificent model that I created. No one else has, and it's free. You can find it on TradingView in my account. You're gonna go there and you're gonna find both versions, the oscillator and the band version on the top. It's called top bottom weekly, and the other one is oscillator, whatever. You're gonna find it in my account, the Trading Parrot on TradingView. Or you can access it directly from Telegram. You don't even need to have an account on TradingView to see these beauties. So the oscillator is right there as support. That is all history of Bitcoin holding support there during bull markets. In the bear market, we have that exception of 2022 that you can see there in the middle, that it breaks below. But we are right there as support. In a bear market, we tend to test that support in the first push down. And then we do a dead cat bounce into the green line of resistance, and then we get pushed lower. Okay, that's what we did in 2022. If you pay attention to that area that is flagged with a vertical line in gray. We could do the same, that's just past performance. You got the memo, you know that already. So let's go now to the big boss chart. And let me see that. Big boss, where are you? There you go. So as you can see, this video is not being edited. Everything is raw the way it is. And here we have the monthly chart. You can see that 102.5 used to be our monthly support horizontal. Before we lost that level, RSI on the monthly lost support and it pinched it. We saw it. And that did it before the price, the way it needs to be. So we got already someone poking on our shoulder saying, you know what, 102.5 is not going to hold. The RSI say that. It sent you that memo in this channel, and then we went straight for the next support. We are right there at the support. We are right there at the point of control of 95,859. We need to hold that level, otherwise we're going to go to next level of support, and you're going to find around the 80s that the price bounced before putting the all-time high. We got those levels of support. Yeah, truly. Otherwise, we go into 74. You know, the green previous resistance of the megaphone pattern that we trade for almost 9 months. All of them are in my memory and they're very important. Let's go BTC against gold because we're halfway through to the bottom of the bear market against gold. It's crazy. People are starting to think, are we in a bear market? Are we going to enter in a bear market? And in this chart, we are already halfway through. When they realize we are in a bear market, we already finished the bear market. So people are out there in the other channels are 6 months late. We are 6 months ahead of what's going on. And we are already pointing out the things that are going to happen because we already noticed this mid this year. In the first quarter, we saw a breakdown of BTC against gold. Yeah, if you're new to the channel, where have you been all this time? Look at this. We broke down in there and look at the arrow on the RSI. If you compare that position of the monthly RSI against the previous cycle in June 2021 in the center of the chart, you're going to see that we have already done pretty much everything. And notice the lows of every bear market on RSI. One makes it to 45, the other one makes it to around 40. And I presume that we're going to bottom against gold at around 36, 38. So take those notes and be one of those people that watch my channel and then come back to me and they tell me, dude, I bought a house. I bought a house thanks to learning from you and all your indicators and all the stuff. This channel is really completely on a different dimension compared to the rest of crypto, socials, Twitter, and YouTube. Yep, I know what I'm offering, so I don't have any hair in my tongue to tell it to you. Leverage squeeze 2, another signal. I'm not going to look at the past performance because my phone is already, looking too slow, but you got that signal there. Go into my Telegram channel and look for this chart. Ask for other members if they want to share a screenshot. Research the signal and the past performance, or you find it in my YouTube channel. You can search in my YouTube channel, Leverage Squeeze. I have extensively covered past performance of this. Watch my previous videos. And let's go into liquidity. I'm going to kill this up because it's taking all stupid resources. And let's have a look at the macro. So prices are reacting to macroeconomic jitters, including hawkish U.S. Federal Reserve commentary, concerns over a potential U.S. government shutdown. AI is hallucinating, but we had already the shutdown and it ended, but there were concerns about continuing. That was the concern. A sharp drop in the secure overnight financing rate, the lowest in 2 years. Crypto markets, so over a billion, I think it was more than a billion. And BlackRock outflows, fear and greed is in extreme fear, and everybody's talking about the debt cross that matters absolutely zero. And everybody talks always about what doesn't matter, classic. And what really matters, they're not watching it. Delta is in the red. We have over 800K or 700K by today. That puts the longs at risk. There can be a dead cat bounce. It could happen on Sunday. I don't know. It could happen. Here is our risk, guys. Okay? Acknowledge your risk. Look at it. Give it a kiss. Take a screenshot. Hang it in the toilet. I don't know. I have an obsession with the toilet, just like the guy from The Office. Anyways, forget about The Office. So that 90 is our risk. And if we take a long too early and we commit to taking a long at the low 90s or at the 95K, we might face, going into 88K, and then we're going to need to use the third order. That's the risk. I don't want to use that third order just blindly. I want to use it is in a smart way. So we have completed taking all the short-term liquidity. We are doing great progress. There's just leftovers, very small. On the long term, though, there is a bit more. So we have to admit that short-term gone. But if you look at long-term, you're going to see that the cluster, the core of the cluster is gone, number 2. But there is still some. So what can we do? Do we say, well, it's support, we took the biggest portion and we take the long and DCA there, or do we wait a little bit longer? The problem is from here we can bounce into, let's say, 107. And if we do that and we haven't averaged down, it's going to be a lot more difficult to enter the break even. If I average down right now and we go up from here, my average of 111 versus 95 will be somewhere in the middle. And that is going to be slightly below 107. So that's another risk to consider. And I think I'm going to leave it right here. I was going to go to Market Monkey Terminal, but it's going to get too heavy, the video. Guys, I hope you enjoy your weekend. I hope you enjoyed this video. And if you did, if you give me some love and hit that like down there. If you are angry about my comments and about me insulting you, please comment as well. That also helps the channel. I will appreciate an insult in the comments, just like I do when you guys are praising me. Traffic is traffic, engagement is engagement, and that helps the channel. So that is our band of support now at 93.5. It should be very thin because it's the weekend, so don't take it too serious. I'll see you in the next one. If you give this video a lot of likes, I'll do a catch up on Sunday. If we get too little likes, I'm just gonna skip it until Monday and take a break. Thanks so much for watching. I'll see you in the next one. Bye bye.